Thank you, Corey, and thank you, Bruce, for inviting me today. Again, my name is Chris Eyler. I am the U.S. Chamber's Executive Director for the Northwest region. I am going to discuss the Paycheck Protection Program loan today, specifically the forgiveness process. But just as a quick reminder and overview, the Paycheck Protection Program was created by the CARES Act, which passed Congress and was signed into law in early April. The CARES Act created, in addition to the Paycheck Protection Program, it created or expanded a number of other federal programs to assist businesses to get through the coronavirus crisis. As of the end of June, the Paycheck Protection Program had issued just under 4.9 million loans totaling $521.5 billion. The average loan was coming in at about $107,000 per loan. In Oregon, 62,769 loans had been issued totaling just under $7 billion. As a reminder, the key feature of the Paycheck Protection Program loan is that the loan would convert to a forgivable grant if loan proceeds were largely spent on payroll and other certain expenses, including mortgage interest, interest on personal property loans, rent payments, and utility payments. Before we get to the forgiveness portion, I just want to point out, as of the end of June, there is still over $125 billion remaining in funding for the Paycheck Protection Program. And Congress extended the Paycheck Protection Program lending authority until August 8th. So while we are going to be talking about forgiveness today, I just want to point out that if you are a business that needs assistance, or you are a business that, or you know of a business that still needs to get assistance and has not received the Paycheck Protection Program loan, there is still time. You just need to go to a bank. This program is administered through, while it's funded through the federal government, private banks issue the loans. So if you still need assistance and have not obtained a PPP loan, please go talk to a lender ASAP, because there is still quite a bit of money remaining in the program to issue new loans. All that being said, today our focus is really going to be on the forgiveness process for businesses that have already obtained Paycheck Protection Program loans. And today what we're going to talk about is how much of your PPP loan will be forgiven, what are the repayment terms for any of the amounts that are not forgiven, and what are the record-keeping requirements that you need to be making sure that you have the proper documentation for when you apply for loan forgiveness. So we largely view the forgiveness process as a three-part process. First, you're going to need to determine the maximum amount of possible loan forgiveness that you're eligible for. You're going to need to determine what, if any, of that amount will be reduced because you reduced payroll, or you reduced the number of FTEs during the time you held the loan. And then you're going to have to apply what's known as the 60% rule, which stipulates that of the amount forgiven, 60% of that must be dedicated to payroll expenses. So part one is actually itself a two-step process. That is, in other words, you need to determine the maximum amount of loan forgiveness. And remember, loan forgiveness is based on the amount of money you spent on payroll, plus certain specified non-payroll expenses during the 24-week covered period of the loan. So what you want to do is look at all of your expenses during that 24-week period, all of your payroll expenses, plus any of your specified non-payroll expenses. Again, those are mortgage interest payments on personal property loans, any rent lease payments, and any utility payments, and total all of those up. Again, think back to when you applied for the loan, all of the expenses that you estimated when you were applying for that loan to determine the amount you needed to borrow. These are the types of things that you're going to look at over this 24-week period to determine the maximum amount of possible loan forgiveness. Next, you need to identify your 24-week covered period. And here you have two options. You can either choose the 24 weeks beginning on the day your loan was dispersed to you, or you can choose the 24-week period that begins on the first day of the first pay period following disbursement of the loan. Now, this second 24-week period option, this only applies to you if you have a biweekly or more frequent, say, weekly payroll schedule. Again, you have two 24-week periods you can choose from. For a lot of borrowers, that's going to be the 24 weeks that start on the day that your loan is dispersed. But if you are a borrower who has a biweekly or more frequent payroll schedule, you can actually choose a 24-week period that begins on the first day of the first pay period following disbursement of the PPP loan. And again, just going back to review, what you want to do is then once you pick that 24-week pay period or 24-week covered period, total all of your payroll expenses and all of your specified non-payroll expenses, mortgage interest payments or interest payments on personal property, any lease payments you pay on your rent for your facilities, as well as any utility payments. Total all that up for that 24-week covered pay period, and that gives you the maximum possible amount of loan forgiveness. Next, once you have your maximum amount of possible loan forgiveness, you're going to need to ask yourself a couple questions. The first one is, did you lower wages at any point during that 24-week covered period? Under the CARES Act, you can lower wages by at most 25%. If you lowered wages by more than 25%, you're going to see some reduction in loan forgiveness. So under the CARES Act, for employees who earned $100,000 or less in 2019, or who were not employed by the business in 2019, loan forgiveness will be reduced for each employee whose average pay during the 24-week covered period is less than 75% of their average pay from the full quarter prior to your 24-week covered period. Now, for most businesses, that quarter is going to be January 1st to March 31st, 2020. So in other words, so again, if the average pay for an employee during your 24-week covered period is lower or is less than 75% of their average pay during that quarter, January 1st to May 31st, you're going to see some reduction in your loan forgiveness. Also, you will see some reduction in loan forgiveness if your average FTE count was lower during the 24-week covered period as compared to one of three reference periods. Here you actually get to choose which reference period your FTE count will be compared to. So your loan forgiveness will be reduced if the average number of weekly full-time equivalent employees during your 24-week covered period is less than the average number of FTEs during one of the following three reference periods. And again, you get to choose which of these reference periods you're going to compare to. The first is February 15th to June 30th, 2019. The second is January 1st to February 29th, 2020. Or if you are a seasonal employer, you can choose any consecutive 12-week period between May 1st and September 15th, 2019. So you look at your average FTE count during your 24-week covered period. That's the period of time you have the loan, and you compare it to your average FTE count during one of these three reference periods. If your average FTE count during the time you have the loan, that 24-week period, is less than it was during your chosen reference period, you're going to see some reduction in your loan forgiveness. Now, there are some important exceptions. The first and foremost is there is a recognition by Congress, as well as the Department of Treasury and the Small Business Administration, that a lot of businesses are struggling to get employees to come back on board for a variety of reasons. So if the business made a good faith written offer to rehire an employee during that 24-week covered period, and the employee rejected the employee, and that offer was rejected by the employee, that will not be held against you. It will not result in a reduction in loan forgiveness. Likewise, if your FTE count is lower because an employee was fired for cause, voluntarily resigned, or voluntarily requested a reduction in hours, that also will not be held against the business and will not result in any reduction in loan forgiveness. Furthermore, there are a couple of important safe harbors to be aware of. If after you've done all of your calculations on wages and it looks like you are going to see some reduction in loan forgiveness because your wages dropped during the 24-week covered period, you can avoid any reduction in loan forgiveness by restoring an employee's wages. So specifically, if the employee's annual salary or hourly wage on December 31st, 2020 is equal to or greater than their annual salary or hourly wage on February 15th, 2020, you will avoid any reduction in loan forgiveness. Likewise, for borrowers who reduced their FTEs between February 15th and April 26th, 2020, you can restore your FTE count by December 31st, 2020 to what it was on February 15th and avoid any kind of reduction in loan forgiveness. This is a recognition by Congress that a lot of businesses, as this crisis unfolded, had to make very quick decisions in order to save their businesses and laid off a lot of employees prior to the CARES Act being passed and prior to the Paycheck Protection Program coming into existence. They recognized that because a lot of businesses made these decisions, they needed to give businesses a safe harbor to restore those FTEs that may have been laid off prior to the creation of the Paycheck Protection Act. So again, for employees who were laid off between February 15th and April 26th, 2020, if those FTEs are restored by the end of the year to the level that existed on February 15th, you will avoid any reduction in loan forgiveness. The last part is that you need to apply the so-called 60% rule. And this is the rule that specifies that 60%, at least 60% of the amount of the loan that is forgiven is dedicated to payroll expenses. And the remaining 40, and the maximum of 40% can be spent on things like mortgage interest on personal property loans, rent payments, and utility payments. So what you want to do here is take the maximum eligible or total up all of your payroll expenses, then divide that amount by 0.6. Divide it by 0.6, and that will give you your maximum amount of possible loan forgiveness. So in other words, think of it this way. If your payroll expenses for the 24-week covered period equal $60,000, your loan forgiveness, your maximum loan forgiveness cannot exceed $100,000. So that, because 60,000 divided by 0.6 equals $100,000, that means $60,000 is your payroll, your minimum amount of the loan forgiveness that can be dedicated to payroll expenses, and 40% of $40,000 is the maximum amount that can be spent on things like mortgage interest, rent payments, and utility payments. So after you've done all of these calculations, you now determine what amount is going to be forgiven under the loan. And the amount that is forgiven is going to be the smallest amount of one of the following three. First, your entire Paycheck Protection Program loan amount. And this is the ideal situation because it means your entire loan has been forgiven and wiped out. Two, the maximum loan forgiveness amount from step one. Remember, that's all of your payroll expenses plus those eligible non-payroll expenses, mortgage interest, rent payments, utilities, minus any reductions from step two. So any reductions because you lowered payroll or because your average FTE count was reduced during that 24-week covered period. And then three, your maximum loan forgiveness amount after you've applied the 60% rule. Again, the amount that's forgiven is going to be the smallest amount based on one of these three calculations. So what happens to the amounts of the loan that are not forgiven? inevitably, for a number of businesses, there are going to be amounts of the loan that were spent on things other than payroll and other than those eligible non-payroll expenses. For those amounts, what happens is they convert to a normal loan with a 5-year term and a maximum 1% interest rate. The first payment will be deferred for the first 6 months, and there are no prepayment penalties or fees. So if you get to the end of the, or if after you do all your calculations, and a portion of the loan is going to convert to a normal loan, and you just want to pay it off, you can go ahead and pay it off ahead of that 5-year period if you want to, and you will not be penalized. Now, there is a small caveat here. On June 5th, Congress made a number of changes to the Paycheck Protection Program to make the program more flexible. Because one of those changes was specifying that loans dispersed on or after June 5th would convert to a 5-year term. Loans that were issued prior to June 5th, those are governed by the old statute, which says that those unforgiven amounts convert to a 2-year loan at a maximum of 1% interest rate. So if you have a loan that you took out and was dispersed prior to June 5th of this year, and any amount that is not forgiven, that becomes a 2-year loan. If you obtained your loan on or after June 5th, the amount that is unforgiven converts to a 5-year loan. So the last thing I want to cover is that you want to make sure that you're keeping as many records as possible to support all of the information you are putting in your loan forgiveness application. The good thing here is that in the application instructions, the last 2 pages of the instructions spell out in quite a bit of detail the types of documents that you want to make sure that you have on hand that will support all of the information you're putting in your loan forgiveness application. Specifically, you're going to want to have documents that support all of the claims you make with respect to payroll, your FTE counts, and any of your non-payroll expenses that you incurred during the 24-week covered period. So with respect to payroll documents, you're going to want to have statements from any third-party payroll services, bank account statements, tax forms for your employees that overlap with the 24-week covered period. You're going to want to make sure you have canceled checks that reflect payroll disbursements and whatnot. Likewise, you're going to want to have similar documents that show the number of average FTEs that you have during your 24-week covered period, as well as make sure that you have similar documents for your chosen reference period. Remember, on your FTE count during the 24-week covered period, you're going to be comparing that to one of 3 reference periods. So you're going to want to make sure that you have documents that reflect your average FTE count during the 24-week covered period, as well as documentation that shows what your average FTE count was during one of those 3 reference periods. And then lastly, you're going to want to make sure that you have documentation that back up all of your payments with respect to mortgage payments, rent payments, and utility payments. Now, I went through all that very quickly, and I recognize that some of it is a bit confusing, particularly with respect to the 60% rule. So the U.S. Chamber has prepared a very straightforward 4-page step-by-step guide to the Paycheck Protection Program forgiveness process. This document is intended to help you better understand the application instructions and the application process, and walk you through the basics that I just walked you through in these slides. You can download that document at uschamber.com/PPP forgiveness. In addition to this document, we also have a number of other documents that walk you through some of the other aid programs that were created under the CARES Act, including the SBA's Economic Injury Disaster Loan Program, some of the tax provisions that were expanded in the CARES Act, as well as some of the other provisions in the Phase 2 bill related to related to paid leave programs created under the Phase 2 bill. You can download all of those on our website, uschamber.com. /coronavirus. We also have a site dedicated to helping businesses helping walk businesses through some of the processes they need to be aware of, some of the questions they need to be asking themselves as they reopen. You can find that at uschamber.com/save-small-business. Lastly, I just want to say one of the things that we have learned through this whole process over the past several months is that there is a lot of ambiguities in the law governing the Paycheck Protection Program. That was done intentionally to give the agencies as much flexibility as possible. But the problem with that is there are a lot of things that are left undefined. There are a lot of questions out there, even as the Department of Treasury and SBA puts out more guidance. So as you're going through this process, as you have questions that come up, do not hesitate to reach out to your lender. The banks are going to be the ones who have the say on what is and what is not forgiven. So don't make any assumptions. Don't guess. Reach out to your lender with questions that are specific or unique to your business. That is the best way to get the answers to your questions about how a particular expense might be treated on the Paycheck Protection Program forgiveness application. And lastly, as you encounter any kind of difficulties or concerns about how this process is working, please, and I'm putting Corey on the spot here, please reach out to Corey and relay those things to him. One of the things that this whole process has demonstrated to us at the U.S. Chamber is how much we rely on Corey and his colleagues at all of the local chambers around Oregon and across the country to really inform what we're doing as far as advocating on behalf of small businesses. I have been on calls like this pretty much nonstop for the past 4 months and getting feedback from Corey and his colleagues around Oregon at all of the other local chambers. And we have been relaying that information directly to the Department of Treasury, to the SBA, to get better guidance on how these programs work, as well as relaying this to your congressional delegation. And a lot of that feedback was reflected in the changes made on June 5th, which lowered the threshold for the amount of money that needed to be spent on payroll, gave businesses more time to spend the money, and gave businesses more time to restore things like payroll and FTE counts to give you more flexibility. So, as I said, please relay any of the difficulties or concerns that come up as you go through this process to Corey so that he can relay those things to me. I assure you, it makes a tremendous amount of difference in our advocacy efforts in terms of getting some of these changes made, because this program, there are still a lot of holes in it, and there are a lot of questions that keep coming up because it was it stood up so quickly. So with that, I'm happy to take any questions.
Okay, thank you, Chris. As confusing as some of that felt, just walking through it, that was crystal clear compared to the previous call I was on about masks and liability and what do you do about somebody that comes to the store and doesn't have a mask on and claims this or says that. And so I appreciate your taking time to help us walk through this, and hopefully it was helpful for those that are on the call and those that will listen to the recording later. So we do have a couple of questions. Before I get to those, I know before we talked about providing a PDF version of the PowerPoint, Chris. So while you're speaking, I actually created that. So with your permission, I'll post that on the chat. Okay, great, thank you. I'll do that right now while you're answering this first question, and that comes from David. He's asking, for purposes of the PPP, how do the feds calculate FTE?
So, in the PPP forgiveness application instructions, they provide a step-by-step instructions on how to calculate it, but it's based on a 40-hour work week.
Okay, great. And then a follow-up, do payroll expenses include employer-paid payroll taxes?
It includes, I'll just walk you through what it includes. Sorry, sometimes it's better just to read it directly rather than do it from memory.
That's okay. One of our one of our local tax accountants is on the line. Shauna Zobrist, I think, was helping to respond to that question. Her input is federal payroll taxes are not included, but your state taxes such as TriMet and unemployment taxes do count.
Yes, and that is correct. And under the changes that Congress made on June 5th, businesses now have the ability to defer their portion of payroll taxes for up to a year. You're still going to have to pay those payroll taxes, but you can defer payment of those in order to have more liquidity during the crisis.
Okay, great. So that rounds out the questions that we had on the chat. Does anybody on the line want to unmute and ask a question of Chris? Bruce, do you have any questions that came up as you were listening?
I'm actually curious if there's a way, I'm calling from the city itself, is there a way to drill down by census tract to try to determine who might have gotten PPP loans already?
So it was just yesterday that the Department of Treasury started releasing that information. And I have not had a chance to really look at it too closely, but I do know that I've been on a couple other calls already today where with a member of Congress who has indicated that he's been able to determine how many businesses in his congressional district received aid. But I don't know about actual census tracts.
Well, I was not so much census tract, I was thinking zip codes or something, you know, and if I said census tract, sorry, that's a fairly small area. We just wanted to get some idea because we've been asked that question in terms of who got PPPs, and you know we know some, and we know it's public information because it's federal money. But so I just thought I'd ask if you knew of a system for doing that.
Go look at the Department of Treasury's website. They've started, like I said, they just yesterday started posting a lot of the data on who received PPP loans, how many businesses received them. Okay. And they might be starting to distill it down to that level.
Okay, that's great. Thanks.
Okay, what other
Any
questions?
other questions?
Yeah.
It's a great opportunity to have you join us because you are a wealth of information about a very complicated program, particularly for a non-CPA.
Yeah. So speaking of CPAs, Shauna, if you're still on, I may put you on the spot here. I know that you're offering a lot of advice to a lot of businesses about PPP and how to manage that. Are there any common questions that you hear a lot that might be helpful to address for those that are listening?
Sure, yeah. I kind of tell the experience that we've seen for our clients. Most of them plan for the 8 weeks, and then having 24 weeks has thrown a bit of just new calculations, trying to figure out if they want to choose the 24-week period. For the most part, that's an advantage to go 24 weeks. The only time it's not is if you aren't going to keep your full-time equivalent number up. But yeah, then we're also looking for the banks to give us guidance on when and how to apply for loan forgiveness. Most of the banks are giving a portal that is available or will be available soon for all these documents that you're gathering for loan forgiveness. It sounds really loud. I'm not sure if I'm hearing the loudness.
That's okay. I didn't mean to put you on the spot, but thanks for offering a couple of thoughts. That does begs the question, Chris, are all the banks that were previously issuing loans necessarily on board to continue doing so now with the extension to August 8th?
For the most part, I think yes, but it's just, I think it's a question of whether they want to continue doing it.
Yeah. So it's up to them individually. So some
Right.
may and some may not.
Some, yeah, it's up to them.
Okay.
And then one of the things that Shauna brought up was the 8 weeks versus 24 weeks. That was one of the changes that Congress made on June 5th. Under the original PPP program, businesses had to spend the money in 8 weeks, and now Congress has extended that to 24 weeks. Guidance that came out a couple weeks ago from the Department of Treasury indicated that they're going to be flexible with that. In other words, you don't have to choose 8 weeks or 24 weeks. If you spend the money in 13 weeks, then you can go ahead and apply for loan forgiveness. You basically have anywhere from that 8 weeks to 24 weeks to spend the money and apply for loan forgiveness. You don't have to wait until the end of the 24 weeks if you've already spent all the money.
Hey, Chris, this is Bruce Coleman again. So, based on your work in DC and on behalf of the U.S. Chamber, what are you seeing in terms of Congress's interest in extending it further or providing additional funds, or what do you see as sort of the possibly on the horizon regarding additional federal stimulus?
So, with respect to the PPP, there's a couple of things that could potentially happen. I want to just be clear, they have not yet happened yet, and they do require congressional action. The first is that under PPP, not all nonprofits are eligible for participate. So right now, only 501c3 nonprofits and 501c19s, those are veterans organizations, can get PPP loans. We are working to expand this to all 501c nonprofits, specifically 501c6 nonprofits, which are local chambers of commerce.
Good.
But again, this is going to require a legislative change, and that would likely not take place until Congress takes up a Phase 4 bill sometime later in July. One of the other things that we are working on is getting a presumption that all, or just not a presumption, actually just having the law stipulate that any PPP loan of $150,000 or less is just automatically forgiven in order to relieve some of the administrative burden on businesses, as well as some of the cost. Again, this is something that is going to require a legislative change. And again, that likely wouldn't happen until the Congress takes up a more expansive Phase 4 stimulus package. Right now, as far as what that goes, we remain fairly confident that Congress is going to pass something by the end of July. As far as a Phase 4 bill goes, what that bill looks like is still very much up in the air. The House of Representatives passed what they referred to as the HEROES Act prior to Memorial Day. That provided a lot of additional funding, particularly for state and local governments, an additional round of payments to individuals and families. It also made a lot of these changes, like expanding PPP to 501c, all 501c nonprofits. However, in the Senate, we still don't really have any legislative language to review. All we know is that Senator McConnell has indicated that any bill that goes through the Senate is going to have liability protections for businesses, so that businesses aren't being unfairly targeted for lawsuits arising from coronavirus. So right now, both chambers are in recess. We expect when they come back from their recess, this is going to be the first order of business, and they're going to take up some form of a Phase 4 bill that hopefully will include some of these additional changes.
I got one other question. It's not about PPP, but it's about a similar subject in terms of federal stimulus, but I don't want to take it away from questions on PPP because you're obviously the expert on that. So if there's some more questions on PPP, I will hold. I guess not hearing any yet. Unemployment,
Hey,
the extra.
Bruce?
Yeah.
Sorry, Bruce. I was muted.
Oh.
I do have one follow-up to the question I asked previously about if someone who has not yet applied for PPP and wants to take advantage of this extension to August 8th, and they go to a bank and their bank says, no, we're not doing any more, and they go to a couple other banks and they strike out. My understanding is a lot of businesses have found that they go to some unconventional places that they are finding cooperation there and being able to apply for the loan, such as like PayPal and things like that. Can you speak a little bit to that, some of those other unconventional sources?
Yeah, so they have, when the program first rolled out, it was pretty much SBA eligible banks, and they kept expanding it to any FDI insured bank, and then they started opening the program up to things like PayPal and other kind of non-traditional financial institutions, and you can go to those. I would honestly be surprised if you have difficulty finding a bank. Right now there's over 5,400 banks that are participating in the PPP, so it's going to be pretty difficult to find a bank that isn't participating in the program, particularly since this is a relatively low risk type of loan for the business, since the federal government is going to back up all the loans. But again, I'm glad you brought that up, Corey, just to reemphasize that there is still quite a bit of money left in the PPP. So if you do need assistance and you have not yet obtained a loan, you can still obtain a loan. And most banks, again, are participating in the PPP.
Corey?
Yeah.
If for some reason a local bank isn't available or able to do so, out-of-state banks will. We got ours through a bank actually in Nevada.
Okay, so there's another resource. And I brought that up just because I know when the original deadline of end of June started rolling around and a couple of businesses were waiting for whatever reason to the last day or two or week, I had heard some reports that some of the banks had closed their portals and weren't addressing or taking any new applications. So I don't know now that the extension has come that if maybe some of those have opened back up. But if not, I wanted to make sure that people knew that there were other resources out there if your local bank isn't available.
Yeah.
Any other questions before Bruce wraps us up with maybe this will probably be our last question because Chris is repeating this presentation, I think he said in Eugene here in about 15 minutes. So we'll let Bruce ask one more question and then we'll wrap it up.
Yeah, so this is not a PPP question, but it's about any future legislation, perhaps the next version of the CARES Act. Are you hearing anything about extension of the unemployment insurance benefits under CARES? I think those are going to expire pretty soon, and I've got someone to ask me about that. So I thought I'd see. I know it's probably not something the chamber may be working on, but maybe you are. So I thought I'd ask.
So yeah, I have heard. So the HEROES Act, which is the Phase 4 bill passed by the House, did include an extension of the additional $600 per week provided by the federal government. On the Senate side, there has been a lot of pushback, particularly from Republican members, on extending that. Some want to do away with it altogether, but there are increasingly a number of discussions going on about extending it, but maybe not at $600 a week, maybe a reduced amount, or potentially having it phase out gradually, or putting in some triggers where if certain unemployment threshold or employment levels thresholds are met, then it would start to step down. There are also some discussions around on the Senate side about providing a similar type of bonus to employees as they return to work. So there's a lot of discussions going on. At this point, it sounds like there's going to be some sort of additional assistance that's extended. It's just a question of how much and how long it will last. That really remains to be seen.
Thanks, and thanks for letting me ask some questions that were not specifically solely on PPP.
Okay. Well, thank you so much, Chris, for your time and for the information today. We really appreciate it. If anybody does have a question that comes up that you didn't get answered or you think of later, please let me know. I'll certainly pass that on to Chris. And We'll see if we can get that answered. Otherwise, the recording of this will go up on the Chamber's coronavirus resources page soon. And with that, I hope everybody has a great week.
Sign off. Just
Yeah.
if anybody came on before we made the announcement about July 16th, 10 o'clock, small business training, entrepreneurship training with the city and the chamber, and Banner Bank is going to be making a presentation regarding working with banks. And as Corey said, entrepreneurs are welcome, others are welcome. Sign up, register, please. It's free. It's on the chamber website. Thank you.
Okay, with that, we will end. Thank you, everybody. Have a good week.